Hey, good morning, AJT fams. How you guys' weekend going? So it's another beautiful Sunday morning over here in famously hot Columbia, South Carolina. We are the official gateway to hell. So you probably don't want to visit us anytime soon. Happy birthday, Matthew. Celebrate. Celebrate. You too, Mitch. Happy birthday to you guys. And don't trade with a hangover. You know what, Michael? This is funny. I was on my way to getting some good rest. I was gonna sleep a little bit later this morning, and my mom calls me at what time did she call? Right at 7 o'clock, because one of the apartments above hers, like we have apartments, we have a the house he lives in is upstairs is split into two apartments, and then one of them, the toilet, the line on the back of the toilet broke off, and the people didn't know it, and so she woke up to her dining room flooding. I mean, water's running out of the ceiling down to all of that stuff. So I didn't get the sleep I wanted to get, but I did get some rest this weekend. So that's always a good thing. So I went over there and kind of got it under control. So now I've got to go back and do some picking up of water and all of that. Yeah, at least it wasn't brown water, that's for sure. We'd have to call a hazmat professional because I'm not going to handle that. We're not dealing with that kind of water. All right, so this week, you guys know for the last couple of weeks, I've been waiting for this spy to close above 300. Like we've gotten above it during the week, but we've never ended the week over 300, and we finally did it this week. You know, it closed at all-time highs. It picked up about 1.7%, so it gets us back to over 20% gains for the year, which everybody's just kind of sitting there like, how long can this thing continue to go up before we get a significant, pullback? Does something happens? But right now we're really enjoying it. We're seeing strong corporate earnings, which is a surprise. Strong second quarter GDP, that was a pleasant surprise. So everything is like better than expected. So it's fueling this push in the market. And then you throw in the Fed looking to cut interest rates due to like low inflation. They're looking to do that this week. So, it looks like we have a perfect storm here for this thing to keep going. Consumer spending kicked up. It's about up to 4.3%, meaning we do have a strong economy, but the confidence that this is going to continue is there. So you can see this is really, we had a really nice bump last week, so we were really pleased with it. So we're seeing a lot of stocks report strong guidance. and that's helping fuel this push. And it's like the trade conflicts with China and that situation with the Gulf and everything surrounding all of this crap in Washington between all branches. People just aren't even paying attention to it anymore. It's like, whatever. That's not important. We need to focus on making money and doing what we need to do. And it's really showing right now. So they seem to be over it and moving on to bigger and better things now. But I'm really liking this. This support held. It held its resistance all through here. Once we broke through it, it seems to be holding. This is the 20 SMA. This is holding. So we're riding high. RS, we're not into the overbought territory. The MACD is still looking good. So everything seems to be consistent. So I'm looking forward to this thing to move. Looking at the sectors here, you can see technology on the heels of strong earnings. They have ramped it up. Now manufacturing is hurting a little bit. The manufacturing costs it's a little bit higher because of the trade issues, the tariffs and all of that stuff. But like I said, companies are over it. They're doing what they need to do to work through it. And so manufacturing is hurting a little bit, but the technology sector is ramping up. And you remember last week I was talking about the financial sector and how it was bottoming out, and start to look for a bounce in it. And you see the financial sector is starting to recover a little bit. So basic materials is still bottom feeding. But we may see a bump in this. We've got about 167 companies in the basic materials sector. And the basic materials are like aluminum, silver, gold, the oil stocks. All that's what's making up this basic materials sector here. And we've got about 167 of those companies reporting this week. So that's going to give us a real good sign as to whether we're still going to continue on the downward side on the basic materials sector, or are we going to see a recovery? So, sector analysis is what a lot of people do when they're trading ETFs, because they're looking to trade whatever sector has diverted from the mean, just separated itself from the other sectors, and they wait to see some life and they'll buy it. Or if it gets too far ahead, like technology, I'll be looking for them to short this before long. So this helps me in terms of vetting what stocks I want to look at. If they're in the technology sector, I'd be very concerned about going long at this point because of how stretched out it is. So we'll see what happens next week. All right, so next week, our focus is going to be on earnings again, because I think about 1/3 of the S&P 500, which, we track the SPY. So the stocks that are in the S&P 500, that's really what we're focusing on. So about 1/3 of those companies are scheduled to report earnings. Again, the Fed is expected to cut rates. And this is going to be the first time since 2008. Now, I was watching, I love American Greed. I was watching it this past weekend well, just last night. And it was on all day. And a lot of these guys that were running these big Ponzi schemes, when the market tanked in 2008, everybody's portfolios were going down, but the guys running the Ponzi scheme was still reporting earnings. So that was a telltale sign, and what got all these guys caught. Hey, if the market's going down, you better start reporting some losses. Don't keep reporting the same gains, running the same program. But it's funny. So back in 2008, that was kind of the focus on some of the shows that I saw, and that had me thinking, the Feds hasn't cut rates since then. So I don't know what that means going forward. But consumer spending is coming out on Tuesday. Wednesday is going to be the rate decision. The manufacturing index is on Thursday. I really want to see what's happening with that. The manufacturing. And then the jobs report from July will come out on Friday. So busy week in terms of reporting and trying to see what's happening. All right, so before we get into the swing watch list, we're going to talk a little bit about the all-day holds, because this is the segue into swing trading. If you've been day trading and you're used to watching your stocks all day, it's going to be hard to move into swing trading where you have to just get in it and not watch it. It's really difficult to make that change. So with the all-day holds, that was what I started, and that was my segue into swing trading. And that's why, I introduced it a couple years ago, because this was kind of the natural progression going into swing trading. Now, sometimes you're going to get days like we had on Netflix. I think this was, Monday? Where the bottom falls out. It hits your first target or your final target. And, whatever. And it causes you to kind of readjust a little bit. So, like in this case, Monday, the bottom fell out, hit 306, and we added back on the rejection. Now, normally we're not watching this, but what happened when this started to bounce, you get an alert as it's getting closer to your stop, back at break even. So it's the only reason I got my eyes back on this. And, got in, and then here I started to feel a bounce or a shift coming. Double bottom here. So, you take it off. But typically you're not going to manage an all-day hold like this unless it's really, really volatile. And then if it's that volatile, you're going to have to give it a little bit more attention. So we manage these not on the 5-minute. I know I'm showing this to you on the 5-minute, but if you go through the class, I'm telling you, you get in on the 5-minute. Basically, you're watching it. I like to get in these early, like pre-market, if I can. And you managing it on a 1-hour chart, 60-minute chart. So these fluctuations on the 5-minute won't scare you out. And that's the whole reason for doing this. So, Netflix Tuesday, this was just a cover, because after this, let me get to here you go. This shows you everything over the series of a couple of days. This is why I like TraderView, especially for swing trades, because it'll show you entries and exits over the course of a couple of days if the trades are connected or you put the trades together. So this is shows all. This is that Monday. Here's where I had to take it off, and you see we bounced, pull all the way back, and off that double bottom. And then as we started to come back, I was like, maybe we'll get a sell-off into the close and touch this bottom. We didn't. So holding it overnight, we had the big bounce. And this is where I was saying I should have added on Tuesday, but I didn't. And we just held it all day and just killed it at the end of the day. But that's how you really want to manage an all-day hold. So the entry would have been in here, and you just hold it throughout the day. And you're not worrying about the 1 minute, the 5 minute chart. You're not worrying about any of that. If you flip over to the 60-minute chart, things will look so much different. And so we will focus on that a little bit more this week, because this is the time. This is the time of the year where the all-day holds are going to be prevalent. I'll move away from the aftermarket earnings trades, because when you get too many stocks reporting, everybody spread out, it's very difficult to get an edge that way. So that's why you actually see me when earnings starts to get ramped up, I stopped trading aftermarket earnings, because it's just too it's just too crowded, and everybody split. So we have to, I start to segue into watching these all-day holds. Now, I don't trade these in my day trading account, but you can trade these in your day trading account if you're not going to sit there and just play with it all day. If you're at work, like when I started this when I was at work, where I had other things to take my mind off of watching this chart all day. And the reason why I moved into it, because it made my day less stressful, having to make sure I got these windows of opportunity to get into the market. But this can be very, very rewarding. And just like everything else, there's a time in the market where you're not going to find many trades like this. They're gonna be fewer and farther between, because you have to get a good catalyst. And earnings is usually the best catalyst, but we just have to wait. Yeah, you definitely want to learn how to trade the basic strategies. That's why this is not one of the main strategies I focus on in chat, is because this is a little bit more advanced. The traders that actually trade this strategy have graduated to this. I know it's just like the earnings trades. They look really, really simple, but it takes incredible patience and discipline. And if you have not developed that during your basic day-to-day trading, it's going to be real difficult to make money on any of these. So you definitely have to master not so much day trading, but let's say if you just want to go into swing trading, you're going to have to master the patience and the discipline you need to allow your trades to work. Now, that's going to be the key. So if you're day trading and you're looking to add this, if you haven't developed that patience and that discipline, it's still going to be difficult to trade these. So that's the key. And so the guys that I work with that are that's trading this strategy, that's trading the earnings, they've pretty much graduated beyond the basics. Their intermediate plus is where they've gotten to. No, that's why I don't focus on this with the 5K account. Now, you could take, if you have enough to take 100 shares of Netflix or 100 shares of Tesla, then, or 50 shares and hold it all day, it can work. That's not a bad deal. But yeah, if you're dealing with like $1,000 account, then no, you're not going to be able to do that. You have to grow your account. And that's why I have things set in the progression that I have them set, so that you can grow your account and you grow into being able to trade more lucrative strategies, because you have more money, you have more freedom at that point. You develop better patience, better discipline, and you have a better chance of being successful, because the profit potential in trading period is limitless. It's only limited by the limitations you put on it and that you put on yourself. So we start with a smaller account, smaller size. If we grow it, then we will have developed the skills that we need to be successful. And then we can start ramping up. We can start being a little bit more aggressive. And because we're able to manage our risk, and we're able to grow. And it's just like with this swing trading that we look at nowadays. Same thing. So Tesla, this is the one that we worked with. When was this one? Was this Thursday or Friday? I can't remember. I think Thursday. Hey, this was the one on Thursday. Yeah, because this is the one I had to do at the hospital. I just logged in right before the close and took it off on my phone. But this is, same thing. Big washout. It hits my first target. And, if I had been here or able to really focus, I probably would have added back here on this if I'd have been able to look at it at lunch. But this was the day I had that emergency, and I wasn't able to watch the market. I was doing the mentor sessions here, and then that was it. I had to take off. But would have been able to add back here. So this was a nice trade on Tesla. And then this was Friday. This is the one that we did Friday. It didn't work out. I was looking for the same move here, but we didn't get it. We didn't really get the big sell-off. It came close. There was a level at 222.25. I put my target at 222. Just didn't get it. But this is what happens sometimes. And when you look at when this thing is ramping up and we're making high, we're grinding up like this. This is a slow grind. And you put in the top, we could draw a line across here, and we're grinding up an ascending triangle. It's probably not going to sell off the rest of the day. So if you see that at lunch, it just makes sense to take it off. This isn't working out the way you want it to, and you can see what happened the rest of the day. It ran all the way back up to 230. But again, you're gonna need, this is from Friday. You're gonna need to have the patience and to be able to separate yourself from the market. And if you're gonna be here and watch it, put it on a 60-minute chart, so that you don't let this volatility on the 5-minute chart kick you out. You don't want it to do that. You can see, and this is exactly what happened here. It came down, but I had my target at 222. It just didn't hit it. It just sucks. All right, so our J&J swing, we got in on this really nice, but we got that pullback Friday. I don't like it. If we open lower than we closed on Monday, I'm killing it. I'm not gonna let this thing come back and test or anything. If it opens, I'm gonna get out of it, and I'll be looking for another trade. I've got to be. There are times where I just held on to this and tried to wait for it to bounce and continue to make the big move. If I can't get it up toward 133 to 134 on this first push, I'm done with it. I'm just going to move on. I'm going to lock in the profit, and we're going to move on to the next trade. But this was really good getting in on, was it Tuesday or Wednesday? Yeah, on Wednesday. Getting in on Wednesday morning was really good. So we'll see what this thing does Monday. Again, if it opens lower than this, for me personally, I'm just going to take it off. No, you manage it how you feel comfortable managing it, but I don't want to hold on to this if it starts to come back. DIS, this sucks. The chart doesn't update for some reason. It still has July 19th, which is where we entered on this pullback here and test of 140. It came 145.43 was the high that it put in on Friday. I mean, over here. So on Friday, 145.50 was my target. That was the profit target I had in to take, my ad off. And it did not get it. It came within 20 cents or something. But what was the high? No, a little bit more than like 31 cents. The high was 145.19. So we didn't quite get to 145.50. So we'll see if we get it on Monday. Hopefully we don't start to see a pullback on this. I don't want to see pullbacks on anything. But this is a longer trade, and we're just kind of racking up a little bit of some profit whenever we can get it. Let me bring up. All right, so any questions on the swings that we're in, or any questions about the all-day hold deal that we talked about? Now the classes are there if you want to go through them and check them out. It really explains it. What the theory is behind that. But like I said, it is a segue into swing trading. And that's the progression that I took that got me comfortable holding overnight. I started with being able to focus on holding during the day, and then I graduated to holding overnight, and now I'm good. Now, the investment account, never really had an issue with that. But when I started doing trading, actual day trading, and watching the market, that element really kicked into high gear. So let's go ahead and look at the swing watch list for today. We're gonna look at the oversold first. All right, so we've got ALGN. This reported earnings earlier in the week. You can see the big gap down. So it slowed down on Friday. It slowed down on Friday, but I really want to see a push back down to this level here. I would love to see a push down to this support. Another day of overreaction, and I would love to buy it off of this support. So this one is going to be on watch. And we got the gap down on earnings, the big sell off that day. Friday was Friday. So you can't really gauge a whole lot on Fridays. So Monday is really going to tell the tale. If we can get some more selling down to here, I'll definitely be a player off of this level. Now, if it sets up, I still may be a player, because look at the window we have back up. Even if it made it halfway up, that would be a decent pickup. So we'll definitely have this one on watch. This is the only 52-week, the only oversold watch that we have. What about the 180 support? You definitely have you definitely have support here. But the one that I'm looking at is up in here. I'm looking at 190. I'm not looking at 180 right now. No, I would never let it go that far. If I got in off of this level, my stop's going to be based off of the price action that got down there. There's no way in hell I'm going to give it a $10 stop. The stop is the same. The stop is the same on all strategies. That's why these three strategies are really, really ideal. They're simple. You don't need to sit here and overthink it. Let's say it opens Monday. It opens higher on Monday than Friday's close. Let's say we open Monday at 201. My stop's going to be a tick below the low of this candle. It's going to be a tick below 195.70. So it'll probably be 195.50. So you got to use the previous day's candle. That's the stop strategy that's taught in the class. No, entry is triggered by an open above the previous day's close. If it opens below the previous day's close, then it's no go. I don't care if it turns green and rips. It's not an entry for me, because more than likely the move won't mature. It'll probably turn around and come back. So the entry, if you haven't been through the class, make sure you go through it, because it explains the entries and the exits perfectly. And you got to know that. You got to have that down pat before you start trading the strategies, because it's simple and straightforward. If we're looking for oversold, I'm looking for it to bounce off of support. So the support I'm looking at is the one down here in the 190s. If we come down and we're bouncing off of that support, and then we get an entry to trigger when the candle opens over the previous day's close, that's my entry trigger. My stop is a tick below the previous day's low. Not the close of the previous day, the previous day's low. Because if it takes that out, we made a lower low, and we're still in that, potentially in a downtrend. Tick like 1 cent, a tick of the candle. Like it ticks down 1 cent. Or 2 cents or whatever. I mean, I'm not going to put it right at 1 cent below it. Like right here, if it's the low is 195.71, I'll probably put it at 195.60. You know, I may just put it at 195.60. But you got to use that same theory about putting your stops on levels. There'll probably be a lot of people looking at the previous day's low. So you want to have it far enough away that it may not get, it may just be a dip, and then it starts to rip back up. You don't want to get ate up on that dip. So if your stop is right around where everybody else's is, the market that's seeking volatility is going to pick it up. They're not seeking stops. They're looking for volatility. And that's what's going to happen. So you definitely want to protect yourself and not have your stop so tight against a logical level where people will place their stops. All right, so we've got oversold. Let me type this one in. Oversold watch ALGN. Yeah, exactly, Mitch. That's why you have to use share size. You use your share size so that you can manage your stop properly, manage your risk properly. All right, so we're going to do the 20 EMA cross first. We're only showing 5 here. This one's in a downtrend. All right, this one looks good. This one looks good. I don't like this one. I don't like this one much. Earnings on this is in a couple days anyway. It's on Tuesday, so Um, that's not going to cut it for me. This is a bank stock, so no go on this. Biotech, another one of my least favorites. But there's no room here. So if you look at this, you can see we're running. This is an ascending resistance, and it just keeps running into it. The only good thing about this is here we made a 52-week high here, and we pulled back. We're within the 5 to 10 day window, so this may be ramping back up. If I was just focusing on swing trading, I would probably give this a hit. The entry trigger was on Friday, because we opened higher than the previous day's close, but it would have stopped you out if you would have used the previous low. Or in this case, it was only, 50 cents? So you might not have stopped out. You might have given it $1 or maybe $1.50 or something like that. But whatever the case is, we did get a big sell-off, then it recovered, but it did trigger an entry here. So if it opens higher than than it closed on Friday, if you want to take this, you'll be anticipating the break of this ascending resistance. And I don't like to do that, because this I'm a part-time swing trader. I don't want to sit here and anticipate it. If I was full-time, I would load up in anticipating the break of this and the break of the 52-week high. Maybe looking at 28 on the blow through. But because I can't really watch this the way you would want to watch it, I got to pass on it. Can't really put it on my watch. So I don't really have any 20 EMA crossovers. I like these better than the 52-week high breaks, because it seems to have more potential. So nothing on that, and we may have 100 52-week highs. Not 43. Okay, so I'm looking for fresh breakouts. I'm not looking for stocks that have been ramping up like this CPRT. This is a clear, it's just been ramping up, gradually going up, going up, going up. This isn't what I'm looking for. This isn't going to give me the explosive move that I want to see. On the other hand, here's a stock that broke out. It just it broke out from here. We made the initial break, and then here we pulled back. Let's see, this will be a better picture. Okay, here's the first break of the 52-week high. We hit, we ran up, here's a pullback, and we broke it on Friday. I don't know how much this thing's going to have left in the tank. We're already over 70 RSI, which you want to start. You got to be a little bit conservative with this. And think, well, how much can this thing run? And I don't like getting in these that really don't seem to have a whole lot of potential. You know, we've been making 52-week highs. Like here's a pullback, blew through it again, pull back, made it here, pull back. I'm not sure how far this thing's going to keep going. And we're looking for short-term bursts. That's what we're looking for. We're not looking to buy something and hold it for a month or, 3 weeks to a month. That's not what we're looking for. So what I like to see on this is a stock just like this, where here's where we broke the 52-week high. Right here. Here's a pullback. We're within that 5 to 10-day window. The only issue with this is the perfect setup I look for. The only issue with this, we didn't get enough days pulling back. And we are almost at 80 RSI. The MACD and the signal line have some pretty decent separation. You can go back, you look at the MACD. Whenever we get too much separation, things start to slow down a little bit. So if you do get this, let's say it does set up on Monday. We got a good way. If we set up on Monday or tomorrow, and the thing is, how far can you go? Can you get 4 or 5 points out of this? If you could, it might be worth it. But what I'm concerned about is we are in overbought territory a little bit. And we do have some decent separation. But this is one that is worth keeping an eye on. So we'll do ESTC. Just to we'll keep an eye on it. But that's the setup I like to see on a 52-week high. Not these. So that's why you see me just blow past these BYND. This one's been ripping since the IPO. Boy, wouldn't it have been nice to get in on this and you're still holding it and we're at like 200 and some bucks. Same thing with CRWD. It's up at 90, almost hitting 100, opened at around 60. Makes you want to start trading IPOs. But there are people that they trade IPOs. It's one of their exclusive trading strategies. So let's keep looking. Yeah, all these are already gone. See, this was great. This is kind of what I look for here, but it's already gone. If you look at, here's a 52-week high. We got a little pullback here, and then wham, this thing, explosive move to the upside. But this hadn't been trending up for that long. We kind of flatlined here and started building up some momentum. But this was close to 100. This is what I like to see. I'm looking for these to blow through this whole dollar mark. This 100. This is a strong mental level here. But KMX, this one was nice. And nice, this was a 20 EMA cross. This set up in the middle of last week. So really nice 5 or 6 point move right up to this resistance. It made a 52-week high, but slammed right into this ascending resistance here. But that's why it's important that you scan every day. That's why it's important that if you're going to do swing trading, that's going to be your focus. You want to scan every day. Oh, I'm not seeing any fresh moves. No fresh moves today. Everything's kind of really overextended. YNDX, this might be interesting. But this, you got to be careful because obviously this thing is manipulated, highly manipulated. I'm thinking they might have dipped this so that people can buy. I will keep an eye on this. I would definitely keep an eye on this. This made a 52-week high, pulled all the way back. You want to be on the side of big money, and maybe they sold this thing off to pick up some buyers. And they may rip this. So let's just keep an eye on it to see what it's going to do. But this 52-week high breaks, these are my least favorite of the strategies, but I scan it because sometimes I can catch a 20 EMA cross a little bit earlier. Or I can catch one that's made a 20 EMA cross. Man, I can't wait for Starbucks to hit 100. I just can't wait. That's going to... So, pretty short watch list this week. And it's probably due to the fact that the market closed at all-time highs. We got stocks peaked out. You know, you don't want to buy at the high. That's the last thing you want to do. So you want to catch it going up as it's breaking through the highs. That's when you want to start taking profit, as it's breaking through the highs. And those poor bastards that are buying at the high will be covering your orders for you. That's what we want to do. All right, so only thing I got on watch, ALGN for the oversold. And like I said, I need that to pull back. I want to see it pull back so they can set up better. The ESTC and YNDX. You know, YNDX, I'm curious, really curious as to where we're going to go with this. Really curious. Watching the price action on Friday, I mean, really got me curious. And the way this thing was trading and how it just would just wash out of nowhere. It stair-stepped down and then a huge washout. And then just let me know there's just something in the water here. So that's why I have it on watch, more so to keep to try and figure out what's going on here. Or did these big guys sell it off to buy it off of this level? Because definitely if I see some buying coming in on Monday, it might be worth taking a risk on this. Buying it on the other side of the 20. All right, TER. That was from last week, wasn't it? We looked at, reported earnings last week. I remember this one. Yeah. Yeah, well, this triggered an entry on a 52-week, on the 20 EMA cross. It triggered an entry here on the 20 EMA cross. However, you had to be bold to hold it through earnings. This is what made this a big winner. You'd have had to get in it and be bold enough to hold it through earnings. And that's not something I like doing unless I've already taken profit. If I've already taken profit, I don't mind holding it through earnings, because what it'll do, if it comes back, it'll most likely come back to the point where I bought it. And I could dump it there. Yeah, it probably did. Let's see. Yep. This ascending support. This blue line. It sure did. Now, we had a pretty good watch list last week. It was defined and focused, but pretty decent watch list. This week, I think the best chance would be ALGN if it catches a bounce. YNDX, that one's a toss-up. ESTC, that one's kind of a toss-up too. It's not as strong because of how far up we are. If we can easily catch a 5-6 point move, but you got to look at how far this thing is run up without a significant pullback. You got to take that into account when you're looking to trade this, especially swing trading it. Day trading it, who cares? It doesn't matter. You're just trading short-term volatility. But swing trading, you got to pay more attention to it. All right. Any questions? Car. Let me see. I'm going to have to open up another chart for it, because I don't think FinViz does it. Yeah, see, FinViz doesn't have it right. Gonna have to open up another chart. Give me 1 second. Let me open up Thinkorswim. Let's see if it's swimming today. Let's see if it's swimming today. Oh yeah, we're waking up. We're waking up. That's all it's doing is waking up. It's slow as Christmas. Alright, so KAR. Well, here's the thing on KAR. You know, we had the huge sell off here, and I was looking to catch it off the bounce. I was thinking we could bounce up to around 30 or something before we started selling back off. It just traded sideways. It traded sideways for what, 2 weeks? I'm not giving it any more time. And the next day after I took it off, it, bounced up $1. Still wouldn't have been worth my trouble. This was just one of those that it just didn't get any type of recovery bounce. Now, it gapped down because, now admittingly, the catalyst was not all that great. The catalyst was this division separating, which is why the chart, I don't understand why FinViz did the chart the way they did it. But that kind of gives you a false, that's the wrong chart. It kind of gives you a false reading here. But, I just took the loss on it and walked away. It didn't make sense to have my capital tied up in something that's just not moving. And I was really patient. But after a while, it just becomes, what's the smartest thing to do? No, I'm only the all-day holds are gonna show themselves that day. I'm not looking at anything. All I did was cover the ones that we did last week, and that was because of earnings. So this week there'll probably be a new crop, new ones that I'm looking at. Tesla is not an oversold. It's not an oversold setup. We need to see more candles selling off. And that's what I was expecting. That's why, we jumped on Tesla Friday looking for another all-day hold to the downside because I thought we would continue to sell. It caught some bids here, or caught some buyers off this 222 level, off this 50 here. Around, it never did catch it, but it caught some support in through here. Now, if we sold off on Friday and we sold down and we made a good hard test of this 50, maybe consideration of getting some, but right now there's just no setup. I still think it's going to go down some more, but It all depends on the big money players that's in the stock as to where it goes. But technically, I would love to see it sell. On Netflix, let's take a look at it. Netflix reported earlier in the week, so it's already recovered. See, this is a oversold. This is a nice oversold pattern. We got the overreaction on negative earnings, and this is the recovery I like to see. See, we got at least 3 candles selling off. This was an entry right here off support because we opened higher than the previous day's close. Really nice bounce. What's that, 25 points? But right now, there's no telling where it's going. The move has already been made. So now we're just going to see how's it going to react to the daily 200. We're going to get some profit taking here, which is what I would suspect. That we get some profit taking here at the 200 and potential pullback a little bit before we start to recover some more. But just looking at the chart, that's kind of what I would expect to happen. It's all going to depend on what it does here at the 200. No, I'm not. I haven't looked at that or looked at small account or anything. My thought is to start back in August. After this week. If everything looks good this week, then I'll be looking to start back in August. But I just put it on hold because it made no sense to try to trade it with the market being the way it was. It's one of those things where you got to make an executive decision if you want to protect your account. And that's what we had to do. It's all about being smart, learning when to test the market and when not to. That is how we survive. All right, any more questions? I'm going to kill the recording here. I think we've got over an hour. But I'll still be here. You can ask any questions that you might have. But I try to keep these recordings to an hour or so. Did I dump XLNX? What do you mean, did I dump XLNX? Oh, of course. Yeah, that we dumped it that very next day because it did bounce back, just like just like we said it would. It did bounce back because that was just an overreact. It was just somebody playing with that stock on the report, and then it bounced back. But we didn't make any profit on it. No. I don't know. I didn't follow it anymore after that.